Kitco Mining's special coverage of the Precious Metals Summit is brought to you by Nucor Gold.
Some thought Troilus didn't have the grade, but some of the biggest names in the mining industry are flocking to the company and the deposit to make the mine a reality. Hello and welcome to Kitco Mining here at the 2025 Precious Metals Summit here in Beaver Creek, Colorado, with me, Paul Harris. Joining me today to tell me all about it is Justin Reid, President and CEO of Troilus Gold. Justin, welcome back to Kitco.
Thanks, Paul.
It has been a bit of a whirlwind 12 months for the company, a lot of important catalysts. Your share price is up 170% over the past year. You now have a market capitalization of 380 million Canadian on the back of offtakes with Arubis and Boliden, who are some of the biggest names in the base metals processing space. Congratulations there. You've also filed for your permit for the mine. A lot has happened in the past 12 months, a lot to unpack there. How would you characterize the past year?
Fast. We have a large team, and everybody's been very, very focused. We have a very well laid out roadmap to deliver on our goals, and we're checking the boxes. I mean, that's kind of all I can say is working through the technical, the structural, and the financial aspects of building a company and a mine. And I think we've broken the back to get to that ultimate construction decision. So.
Now, Troilus, if we go back a couple of years, Troilus is very much a large, sort of low-grade gold deposit. But then a couple of years ago, you started talking about the copper component. And obviously, since then, the copper price is up to, $4.60 a pound. It's become a critical mineral, everybody wants it. And, you've got Boliden and Arubis. So copper's really been become a fundamental part of the story. What does the future of the Troilus, what will the Troilus mine look like?
I mean, we are a copper mine. At the end of the day, 99.9% of our volume is copper. We produce a copper concentrate, a copper product. It just happens to be very rich in precious metals, gold and silver. And so at the end of the day, when we were looking at how are we going to finance and structurally finance this mine, you go to what product do you produce? Well, we're not producing doré. We're going to produce a little bit through gravity and produce some doré on site. But at the end of the day, we're going to have over 80,000 tons of copper concentrate a year. That means we have to produce it, ship it, find a home for it, and get paid for it. And so that ultimately led us to look at the availability of copper smelters, where they're located. And of course, with Cobre Panama shutting down, increased focus on copper concentrate production, especially within the European Union, for which their concentrate was a big provider or supplier, came into focus for us. And so we started visiting these smelters. And these smelters aggressively approached us to secure offtake. And with that came aggressive government support from their respective countries. And so we were able to build around that demand a very eloquent, government-backed, sovereign debt-based financing package, which provides our shareholders with flexibility, certainty, and a very low cost of capital.
Excellent. Now, there's been mining at Troilus in the past, and I believe I'm correct in saying that way back when, a lot of that was shipped to Europe for processing. So imagine the smelters in Europe had knowledge of what the deposit was, how they can process it, etc. So they had a head start in terms of their reach, their engagement with you.
Yeah, the mine operated for 14 years, and Mint Mining operated it. During that time, they produced about 2 million ounces of gold and 70,000 tons of copper, the exact same way we're doing it, or are going to do it. And during that time, the concentrate went to 3 places. It went to the Horn smelter, of which a third of our concentrate is going to go. Went to the Arubis smelter in Hamburg, where a third of our con is going to go, and a third went into Finland with Boliden. So we're just following the game plan that was already out there.
Oh, so it's not you being a genius.
Well, I think the market timing is certainly different, but the demand for concentrate with TCs and RCs and essentially on the spot market at negative, provided a great opportunity for us. And ultimately, we are feeding the 3 closest smelters to us.
Now, let's put that into the context of the overall financing necessary to sort of build the mine, bring that back into production. With your share price up so significantly, with some key agreements in place in terms of the offtake, with the financing from some of the European import-export banks, what position does that put you in when you're trying to arrange the rest of the financing package? Does that put you in a position where you can ask for what you want rather than having to take what's on offer?
Absolutely. I mean, 1, the commodity price helps. 2, the value of our company increasing helps. Right? You're not financing as a $100 million company. You're financing as a 400 or higher. But ultimately, we have incredible counterparties through this arrangement. We're dealing with Euler Hermes, Finvera, and EKN from the European Union, who are providing raw material guarantees to our banks who are lending us the money, and Export Development Canada. So our federal government as well. Our MLAs, so those leading the debt, is KfW out of Germany, out of Frankfurt, SocGen out of New York and Paris, and EDC, our federal government, as a direct lending bank. So this is AAA-rated sovereign debt with huge flexibility. The tenure of our debt, it will be amortized over the length of our offtake. So we want to amortize it over 10 years, we'll sign a 10-year offtake. You want to amortize it over 15 years, we'll sign a 15-year offtake. So it's very flexible, low-cost money, all backed upon delivering of con. And so as another counterparty coming into the deal to provide the rest, they're looking at who your partners are and who their partners ultimately are. And you really couldn't have better partners.
That's quite a luxury position to be in. In terms of the overall sort of quantum, how close are you to getting to finalise the financing package and having all that in place?
Yeah, we'll have, we call it our tranche 2, which will be on the order of probably about another $500 million US through subordinated debt, potential royalties and streams, small amount of equity from the participants, and we're getting very, very close. You know, I'll guide to the end of the year for completion, but we hope to have it before that.
In terms of the equity component, in a typical finance package, you're looking at 60-40, 70-30 debt to equity. What sort of ratio do you think you'll end up with?
Less than 10, probably.
Excellent. Okay, another key aspect for the project development, you filed for your permit application. In terms of the political climate in Canada now, there's obviously been a big push for natural resource development, to facilitate natural resource development. The Prime Minister supports a one project, one review approval process, and there's been various other things that government's really trying to accelerate the permitting process. What's the sort of timeline for your permits?
Well, to your first comment, we're seeing that firsthand. 3 weeks ago, I was with Prime Minister Carney in Germany for 3 days. Had the luxury of spending a lot of time with him, and as well with Minister Tim Hodgson, who's the Minister of Resources and Energy. And that was a major theme. Our major takeaway from our critical minerals roundtable, which we had in Germany with the German government, which involved Troilus and Rubis, was about speed and execution. That's Canada's goal. Thinking east-west, not north-south, for obvious reasons. And I will say that Prime Minister Carney was on task for sure. He took notes. He listened to all of the participants, which included the CEO of Teck, who's in the news today, the CEO of Vale Metals, and then myself. And I'm very pleased. We left, and on the Friday following, they announced the Office of Major Projects. Stage 1 is going to be on pipelines, infrastructure, and ports. Stage 2, you're going to see the resource companies come in. And we're very well aligned with that going forward. This focus federally and provincially is well aligned. We're seeing the exact same focus from the Quebec government. We submitted, after 4.5 years of work, our ESIA about 4 months ago. We have very clear vision on all review and consultations. We're working on a daily basis. I will say we have 100% engagement from all of the parties involved, and I think we're in an extremely good position to be permitted by this time next year, if all goes well. So our life is getting easier with the new administration because of the focus, and that's something we haven't seen for years. So Canada is all about execution now. It's not just good for Troilus, it's good for everybody.
Okay, well, I'll have to book you in for next year so we can talk about that. Hopefully that'll be that coming through just before the event next year. Now, Troilus is one of the largest copper-gold deposits in Canada, which I imagine will make it quite a prize for any bigger company out there looking to add something to its portfolio. So what's the ultimate aim of the company? Are you aiming to sort of build Troilus? Are you aiming to be bought out by somebody else?
We've done everything in our power to put the right processes, team, and structure in place to build this mine. Over the last year, maybe a little longer, and a lot of our success is a direct result of these people. We've improved our board by bringing Chantal Lavoie, who was the CEO of IOC, Iron Ore Company of Canada, as our chairman, who has an operational development focus. As such, our company has evolved rapidly from exploration and engineering to engineering and execution. We have brought in Denny Rivard, whose last position was the chief engineer for the Case Infrastructure Fund, one of our largest shareholders in Quebec. He has brought his entire development team in place, coupled with BBA, the largest independent largest independent engineering company in Quebec, out of SNC. We have 70 engineers working right now, both on owner's team and BBA, on a full EPCM detailed engineering. So we are moving towards all of the detailed pieces of construction and execution. As well, we brought in Andy Fortin and his operational team, Agnico pedigree, Goldcorp pedigree, Meadowbank, Eleanor, and Andy has built our entire Quebec operational team. So over the last year, not only have we our market appreciation is not only the commodity price, it's the fact that from leadership to execution and operations, we have every piece in the place, in the puzzle in ready to go. So why would we want to sell? You know, we have people who have done it before, who have executed very well, have had great reputation. We have the financing in place, or almost in place, and we have the government support in place. So you can sell Troilus at a discounted multiple of NAV right now, and after 7 years of work, our founders say, well, that wasn't worth it. Or we can build a mine, become one of the largest copper gold producers in Canada, that has over a 22-year mine life on half our resource, and we can get valued like Artemis is, which is a $7.1 billion company right now. And our assets are incredibly similar. You look at what Stephen Dean and the Artemis team has done, it's been perfect execution. Stephen has done an amazing job. There is no reason why, if our team execute, we can't do the exact same thing. And at 10% debt to equity, or equity to debt, I think we want to finish that.
Absolutely. Well, let me sort of twist that question then, and perhaps this is looking too far into the future. If you're going to build the mine, are you then looking at growing a mid-tier gold copper producer? Will you be looking to acquire other assets to harness and benefit from the team that's been assembled?
Absolutely. Hardest thing to do is build a team. Lots of assets out there, lots of great assets that are poorly valued or poorly managed. Build the team who's done it, who works well together, who executes, and go out to do it. Clive has done an incredible job at B2 Gold. That's how they started. And through BIMA originally. That is how Alamos has started. That is how all mining companies started. That's how Agnico started. So you have to start somewhere. why not start with one of the largest gold copper mines in Canada? At current prices, generate almost $500 million a year in free cash flow and take it from there.
That's a good start. Now, in addition to all this going on, you've continued to deliver with the drill bit, including a record 56 metres grading 2.44 grams per tonne earlier in the year. What is the aim of this year's drilling programme for you?
Twofold. The first, our single most important drilling focus was the first 5 years of production. So we have a reserve. We understand how the historic pits reconcile very well. The Southwest pit is the new discovery that we made 4 years ago, but that's going to be the first 5 years of mine life. So we went in and we brought the spacing in, reduced the spacing materially to make sure that we had bulletproof data. And what we found is that, and usually the more you drill, the lower grade you get. What we found was the opposite. We had great continuity of the zones, and our higher grade zones were higher grade and thicker and came to surface. So from that standpoint, we are eliminating a lot of risk early on, which is the most important time when you're commissioning a mine and have the amount of debt we do. The second, which is still to come to the market, we completed a regional program around the mine, looking at targets which we haven't got to yet. And what I can say is that just like the last 7 years of drilling, Troilus has a lot more to give, and we look forward to giving that to the market. And this winter, we'll be going regionally down to the south, confirming that Troilus isn't a deposit, it's a belt. And so I think that'll add far more value to Troilus when we can say, this isn't a mine over 20 years, this is a generational scale asset that has multiple potential deposits to feed a centralized mill.
That's I think, potentially a very interesting aspect, because you're further north than the sort of Abitibi regions and you have less competition, if you like. There's not so many players where you are as there is in the Abitibi, so you have that regional, that district potential. You're the only game in town, so to speak.
Yeah. There's some lithium exploration which at current prices isn't economic, so we've seen a decrease. There's some very high grade gold at Sumitomo's deposit, which is fairly close to us, and they're actively drilling. And so at the end of the day, you're putting $1 billion plus of infrastructure in. You're going to be a focus for whoever develops in the area. So,
excellent. Now, it sounds like you're not going to be active in M&A in terms of somebody coming and buying you. But let me ask you, when you sort of view the sort of competitive landscape out there, with one or two exceptions, there seems to have been a lack of meaty transactions. We've got a growing mid-tier sector. They don't have big pipelines, so presumably there's a lot of companies that are going to have to go out and buy new assets. They're not doing the exploration. They don't have the pipelines. What's your view on M&A? Why hasn't there been been a lot of activity so far?
Well, I think the first thing is what we have seen is with the current commodity prices, a sector that has historically been fairly bad stewards of capital have become good stewards of capital. So we've seen improvements of balance sheets, stocks, buybacks, reduction of debt, growing essentially retained earnings. So I think that's step one. Step two, or item two, is we have seen a lot of divesting of non-core assets by majors, by Newmont, by Barrick, by others. And as such, we've seen, like Discovery Silver, we've seen a lot of new companies form as a result. That's taken a huge amount of capital and focus for corporate development teams. As these portfolios became available, they're operational or near operational. A lot of focus went to, here is immediate cash flow or near-term cash flow. Let's look at those first. Is there an opportunity? And that's occurred, and I think that's wrapping up. And, the Newmont transactions took a year and a half, 2 years. So now we have all these corporate development teams, a lot of them are here this week, sitting saying all the non-core assets from majors are divested in other hands. balance sheets are only getting better every day. We're seeing mergers of equals in some places, but I think right now we're probably going to enter a very robust period. I think this secular run we're seeing is just starting, and so I think certainly through the end of this year, but next year is going to be unbelievable M&A, unbelievable, because quite often these junior companies were hanging on, right? The valuation was low, the management and board and shareholders we all say we're undervalued, but there was no real return for the management or the shareholders at that time. Everybody's up. Everybody's running a bit of a hot hand now, and so there is kind of a completion of strategy which will yield itself better to M&A as well. So the social side.
Given those aspects and obviously the higher gold price, do you see it's acceptable for boards and shareholders, premiums again, to have premia and to have perhaps substantial premia in deals? Are we getting away from the merger of equals concept?
Probably, I think so. It depends on how well staffed you are and how good your teams are, if you will. If you need their people, mergers of equals are probably going to be key, but I think you're going to see premiums going back up. If you want an asset of scale, you're going to have to pay for it. And there aren't a lot of assets right now that are in the stage of development to have impact within the next 3 to 5 years. It's a fairly short list. Troilus is on that list. But yeah, premiums, if you have everything you need to develop and deliver a great asset to your shareholders, you're going to have to pay to give that up. And so I think you're going to see premiums going back up.
Okay. Well, let's draw our conversation to a close, Justin, with what are some of the key catalysts that people can expect to see from Troilus over the next 12 months or so?
Yes, so you're going to see a lot of permitting updates from us. You're going to see completion of financial completion. I think a major catalyst for our company will be for the market to say, you have everything you need to build this mine. You have the people, you have the government support, and you have the financing. And I think we're going to be in a position to deliver all of that by the end of the year, which sets us in very good stead moving into construction.
Well, Justin, congratulations on a great year. A lot more success to come by the sounds of it. Thank you very much for joining us today.
Thanks, Paul.
And we have a lot more to come from the 2025 Precious Metals Summit here in Beaver Creek. So stay tuned and hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of the Precious Metals Summit is brought to you by New Core Gold.